There we go. Good morning, everyone. Welcome to this Buying a Home in the Netherlands webinar. First of all, thanks very much for taking some time out of your day on this, well, today not so rainy, but I can't really call it sunny day. Before we get started, good to know is that today's session will be recorded and most likely shared with you guys tomorrow, and otherwise on Friday. Let's get started. So who am I? My name is Ludo. You can see my picture on the screen, and hopefully you can also see and hear me clear as well. I'm an expat buying manager at Expat Housing Network. I am they call it the Amsterdam expert, but what they mean with that is that I'm primarily focused on Amsterdam, but also places like Zaandam, Haarlem, Almere, Amstelveen, anything in the so-called greater Amsterdam area. I am from the Netherlands, born and raised, but I've lived in the US for a couple of years as an expat child, but then decided to move back to the most beautiful country and city of the world, of course. I'm a proud father, not yet of any kids, but I am a proud father of 2 cats. If you guys are lucky, they might jump up in front of the screen. They love the attention. I live in a new build currently. I used to live in a very, very old property built in the 1800s, then moved to a property that was built in the 80s, and now live in a property that was delivered in 2021, so a very new building. So yeah, I've seen it all. I don't do this by myself. I definitely believe that greatness is achieved in the agency of others. That means that we have a wonderful team here at EHN. From left to right, so we have Giovanna. She's born in Brazil, originally from Brazil, speaks English, Portuguese, Spanish, and Dutch. We have Rafaela as well, also from Brazil, and therefore obviously speaks Portuguese, but also speaks English and Spanish. And I have to say her Dutch is definitely coming along as well. Ellen from the Netherlands originally as well, but has lived in Thailand for quite a long time, therefore speaks English and Dutch, but also some Thai. And I just learned also some Japanese actually, so pretty cool. And then we have Rick with us today here as well. Rick, would you like to introduce yourself?
Hi, good morning, everyone. I'm Rick. I'm also a buying agent at the buying team at Expat Housing Network. I live in Rotterdam, so we're working in the same team, but sometimes we are some of rivals. No, that's just kidding. But I'll be answering any questions you have today during the webinar. So feel free to put them in the Q&A. If I don't answer them during the webinar, we'll have some time at the end to discuss those.
Perfect. Thanks very much, Rick. Always a pleasure to have you here. Well, a quick introduction of EHN. We're no traditional real estate agents. What we mean with that is that we primarily focus on purchasing properties and renting properties. So we really help our clients secure a home in contract in comparison to selling a property or letting. So our specialty is really making sure that you find and secure your dream home. We charge a percentage of the appraisal value. That means that there's no incentive for us to pay a higher or lower price. Our fee is based on a independent value, which is the appraisal value, and determined by an appraiser. Well, we definitely know what it's like to sell it in a new country. As you saw before, the majority of us are expats or have had an expat experience. The added value of EHN. Well, selling agents definitely take offers from EHN a little bit more serious, meaning that they know that we've done our research, that we always work with expats, so we know what we're talking about. We've done our price research, our property document review, and that kind of stuff. So once we make an offer, they know that we are well informed. It's definitely possible for us to book viewings when it's no longer possible for people without a buying agent. Selling agents typically have an additional or 1 or 2 days to have people with an agent come by, so for sure added value. Now, big one, support by reviewing Dutch legal and property documents, making sure that the property doesn't only look good, but that the medical file of the property is also in a good condition. Now, this is an important one as well. We'll touch base on this a little bit later, but defining the market value through market data. In other words, doing a price research, making sure that the value of the property is in line with our expectations and basing our offer on that. We'll obviously inform you about rules and regulations, make sure that you know what you're doing and that, well, again, everything is in line with the norms and expectations. And we'll make sure that you guys don't make the same mistakes as we might have done while purchasing our own homes. I'm not here by myself, not just by Rick, with Rick as well, but we're here with our partner from Mr. Mortgage. Robin, would you like to introduce yourself, the team?
Sure. Thanks, Ludo, for the introduction and for hosting this webinar as always. My name is Robin Uitenhage. I'm the second one from the right. I already gave away how you pronounce my last name, so I won't challenge you to do that. And I'm joined by my lovely team, Cesar, Egle, and Uskan, where Cesar and Uskan are my fellow financial specialists, and Egle is our growth marketeer, getting us out there into the world, where one of you also get to know us, of course. I was born and raised in the Netherlands, in Amsterdam as well, always in a very international surroundings with a lot of different nationalities, and I always very much liked all the different stories that you hear from everybody, and especially when it comes to you guys, basically. So everybody that moves to the Netherlands and wants to buy a house here, I very much appreciate and like the different stories that are. I mean, you have to be very adventurous, of course, when you move to a new country and then put down roots here and find your way around. And that's what gets our blood pumping, basically, to guide you through that process, to understand kind of the maze that it can be sometimes, understanding the administration and how to get everything done and to sort out your finances best way possible. That's what we very much enjoy doing. And our primary focus is obviously buying a home, but also everything that's surrounding that financially is something that will guide you in and advise you about. That's basically what we do. So from start to finish, basically from the moment that you start considering, hey, is this something that we want to do? Does it make sense to buy a house, or should we rent first for the next couple of years? Maybe that's something that will give you clear advice about as well. Even though we're called Mr. Mortgage, we don't force you to buy a house, of course. But the most important thing is that you make choices based on valid information and that it actually makes sense to you. So that's basically what we do. Whether you buy your first home, second home, third, fourth, fifth, doesn't matter. Or if you want to move away from your home and want to rent out your property, or buy a next property and want to rent out. Maybe you want to do an increase to finance some renovation, or maybe life happens and there's a split up of a relationship. You want to sort out your mortgage. Anything basically when it comes to that, we can help you out, so you always know exactly what you're facing. So that's basically what we do. And I'm very excited to tell you all about how that works in the rest of this presentation. So back to you, Ludo.
Fantastic. Thanks very much for that introduction, Robin. Great to have you here. All right. Well, now you guys know who we are and well, what we're here to do. But I'm also very curious to know who we're actually talking to. So I just launched a very small poll to see how you found this webinar, but also in what age range you are, what your household looks like, and then what made you decide to buy and where you would like to purchase. Obviously not obligatory, but could be cool to potentially tailor the webinar a little bit towards the people that we're talking to. So I see a few people that are between 25 and 34 years old. I'll tell you later on why that can be of added value. A nice mix of households, singles, couples, families. And the majority of the people would like to purchase because the rents are too high, which makes total sense. Rents are expected to keep on rising as well. So stick around to find out why purchasing is definitely a good option. And then the majority is choosing for the most beautiful city of the world, which is Amsterdam, which is perfect. Cool. All right. Thanks very much.
Rick is remarkably silent when you say that, Ludo. That's
yeah. Well, Rick for sure is not going to say anything. No, that's funny. All right. I'll end the poll, share the results, so you guys can have a quick look what we're looking at and what I'm talking about. And I'll stop sharing. All right. Cool. So today's goal is obviously to add value to you guys. We definitely believe in sharing information freely. Sometimes there's these misconceptions that the real estate world is some secret society where people only tell each other the information, but definitely don't want outsiders to know. Well, that is not the case, I can tell you. or I'm missing out on something, but no, that is for sure not the case. And that is something that we want to emphasize, that we're here to share that information freely for sure. Some things that are good to know, and I'm going to pass right back to you, Robin. Do you want to enlighten us about the NHG?
Sure thing. NHG, it's a short, well, it's a Dutch abbreviation, but you can translate it to National Mortgage Guarantee. Basically, it's kind of an insurance arrangement or a guarantee, if you will. You can consider it basically kind of like a doomsday insurance. A lot has to happen to kick it into play. Basically, what happens if you buy a house for, let's say, 400,000 euros this year, and then you live in the house, everything goes fine, and then 4 years later, your mortgage, you repaid a bit, so you only have a mortgage of 380. But then disaster strikes because you lose your job, because you cannot do the job anymore, because maybe you got disabled mentally or physically, or you got laid off because of financial situations of the company. Basically, if it's not your fault and you got laid off, then that happens. That's not what you want, of course. Now, nothing really is the matter then, because you might find a new job. Now, if that's not the case and you cannot pay the mortgage anymore, first thing that NHG will do is they'll say, okay, they will contact the bank and see if they can find a payment arrangement. So that's they will help you out there. Now, if that doesn't work, you have to sell the house because you cannot afford the mortgage anymore, right? So then selling the house. All good if you can sell the house for more than the 380 mortgage that you have left. But if that doesn't happen, so let's say the property value decreased to 350, then you have to sell the house. So you don't have a job anymore. You cannot afford your housing anymore, and you have to sell the house, and you have a remaining debt of 30,000 euros. Now, this is kind of the doomsday scenario that I mentioned. This is when National Mortgage Guarantee will kick in, and they will pay this remaining debt for you. Very nice. Couple of things. This drastic drop in property value is not necessarily expected. Not what the market is looking like right now with the supply and demand. There's significantly more demand than supply. So it's unlikely that it will drop by that much. So why would you still go for that? Sure, it's an interesting security that you have. It's, by all means, it's an insurance. But one of the most important things is that your interest rate will drop significantly. So there's a two-way benefit there. So you have this insurance, and you have a significant drop in interest rate. What that significant drop means is about, depending on the bank, depending on how long you fix your interest rate for, but on average, somewhere between the 0.4 and 0.5% lower. So where the average interest rates right now are around 4.4, 4.5, with NHG, it's about 4%. Now, that all being said, so it's an insurance arrangement, you get a lower interest rate, but you can see two numbers here, 355 and 405. And that's the cap, so that's the maximum you can get and the NHG arrangement in your mortgage for. By the way, any bank gives the option of including NHG, and this is something that we, as your financial advisor, will take care of. So basically, 405,000 euros is the maximum that you can get the NHG. Now, what is that 405? It's either the purchase price or the value of the property, whichever one is lower. If you buy a house for 410,000 euros and the property value comes back as 410, you cannot apply for NHG at all. So not only for the increase or something, but it's only up to 405. Anything over doesn't apply anymore. So that can be a very nice incentive too. So from when you find a property in this range, it can be very interesting because your interest rate will be significantly lower, and you have an additional insurance that you have there as well. This insurance doesn't charge you a monthly premium. It's a one-time buy-in. Ludo will discuss that later on, if I'm not mistaken as well. Basically 0.6% of the mortgage that you take out. This will all be specified when we set up the calculations for you, of course, for you particularly, but it's that's basically it. Insurance, low interest rate, one-time buy-in, and with a cap of 405 this year. It will increase next year, probably.
We expect so, indeed. Definitely. Cool. So yeah, definitely something that is interesting if you are buying at 405 or lower. Something to keep in mind. All right, then transfer tax, something that you guys might have heard of already. What is transfer tax? Well, simply said, it's the tax that you pay once ownership is transferred from a seller to a buyer. Now, there are a few different rates. On the left, we see the transfer tax for residential properties. This is something that you guys will most likely incur, and that is the one that you see the most as well. This is where the property is used for your long-term own main residence. Then the transfer tax is 2%. Easy as that. Now, you also have transfer tax for properties where the use is not for long-term main residence. In other words, for an investment property. For example, if you want to rent it out immediately or want to flip it or something like that, then the transfer tax is significantly higher, 10.4%. However, there is also a transfer tax exemption, and this is where it becomes interesting. If you meet certain requirements, then you are actually exempt from paying transfer tax at all. Three things. First of all, you have to be under 35 years old. You should be a starter in the eyes of the government. The purchase price of the property should be 440 or less. Now, this is only purchase price, so if the value is 500, but you're able to purchase at 440, fantastic, no transfer tax. Other way around, however, is also the case if you are buying or the value is, let's say, 430, but the purchase price is 450. Yeah, then unfortunately you cannot make use of the exemption. The purchase price really has to be 440 or lower. And the third one is you can only use this exemption once. So this has to be the first time using the exemption. If you meet all of these requirements, so you do have to meet all of them, then you are exempt from paying the transfer tax and you go from 2% to 0%. Keep in mind, this is again only on the residential use. So if you are buying a investment property at 400, you're under 35 and you haven't used the exemption before, still you cannot use the transfer tax exemption because it only is applicable on for residential properties. On the right bottom, you see visit the transfer tax checker. When you receive the slides tomorrow, Friday, then you can press that button, actually fill in some information about yourself and the property that you're looking to buy, and then you can see exactly how much transfer tax you're expected to pay. Okay, then let's launch another small poll to see where you guys are in the process. Potentially you're in the researching phase, maybe you've already made an offer. Sometimes we have people in the poll or in the webinar that have already had an offer accepted, which is pretty unique, but would be cool. And to see if you've had a conversation with an agent or a mortgage broker yet. And well, it's easy to make the assumption that everyone's in the researching phase because that's probably why you are here. But I see here that there are also some people that are viewing properties, which is good. Good to see what's out there and to see what the differences are also between the beautiful Funda ads and the actual properties themselves. So there can be some differences sometimes. All right, thanks guys. Well, good to see that everyone is in the researching phase. I'll share the results as well. Cool. All right. Well, let's talk about renting versus buying. Maybe a bit strange that we're going to touch base on renting in a webinar that is focused on buying, but I think it's important what the differences are between the two. Let's list some reasons why renting can be attractive, or in other words, why you should rent. First of all, and a very obvious one is the flexibility that renting gives you. All right, there are pretty much no strings attached. If you want to move on to your next adventure, assuming that you're all expats and you might want to move on to a next adventure in a couple of years, yeah, then when renting, you give your landlord 1 or 2 months notice, and after that, you're free to go. Also, in a market that is ever changing, you never have a property that you need to sell or anything like that. Besides that, there are pretty much no taxes or maintenance. Why do I say pretty much? Is because you still have your user taxes, like your garbage removal tax. But when you are a homeowner, you also have your property tax, your sewage tax, and water board taxes, and that's quite expensive. Plus, all the maintenance for a property is for the homeowner. Only the small things like chip work on paint work on the inside is for the tenant. So there's pretty much no taxes or maintenance. There's also no down payment required. Now, there's a difference between deposit and down payment, of course. Deposit is something, if everything goes as planned, you get back. Down payment, you will not get back. With down payment, and we'll see this later on, I mean, for example, notary costs, the transfer tax we just talked about, all that kind of stuff. When going for a rental property, you pay the deposit and your first month rent, and you're in. Especially if you're renting furnished, then it's rather easy. Now, that correlates with the cons of owning a home. Again, the taxes, the maintenance, and not so flexible, or in other words, it's much more difficult to move. Well, we hope you guys are still interested in buying a home, because there are definitely a lot of pros to owning a home. First of all, stability. So I just mentioned, ever-changing markets. And that is definitely the case, especially, if you see the market of 2022 compared to the current market, things definitely have changed. Now, when you're owning a home, there is no one that is going to tell you that you need to leave the property, keeping in mind that you do need to keep paying your mortgage installments. But if you do that, then there is no one that says or can say that you need to leave your property. So if there is a storm or crazy things happening in the world, the one thing that is stable is your property, or the place, your home, let's say. So that is a very nice thing to have. Then your monthly payments, they build up equity. Of course, a part of it is interest, but the other part is pretty much putting money back into your bricks. And with that, you're building up equity. Even if you don't sell at a profit and just sell at the same price that you bought the property for, you will have paid back on your loan, and therefore have been building up equity. Now, there is also a mortgage interest deduction scheme in the Netherlands, and this is quite interesting, where you will get a percentage back of the yearly interest that you've paid over your mortgage payments. I think it's currently at around 36-37%. So once you're doing your annual income taxes, you can actually get back around 36-37% of the interest that you've paid over your mortgage payment. So that is pretty interesting. Now, again, the cons of renting a home correlate with that. The expectancies that the rents will keep on rising, making it more and more expensive to rent a property, more and more money that you're flushing down the drain. There are no tax benefits, and there's no creation of wealth. You're pretty much paying off the mortgage of your landlord, putting money in his pocket instead of putting it in your own pocket. The financial side of renting versus buying, Robin.
Yes, thank you for the clear explanation so far. And of course, in the end, you also want to know one of the reasons that you previously mentioned, some of you guys, that you basically want to buy a house because the rental payments are too high. Makes sense. And this is an explanation of what it could look like. Just an example, two quite similar properties when it comes to square meters and finish to the property and so on. Where the interest rate, in this case, we use an explanation of an example of 4%. Now the interest rates are slightly higher, about 4.3 or 4%, but just to give you some insight here. With the duration of 30 years, the gross monthly mortgage payments, so this what will be taken off your bank account every start of the month, will be 2,363 euros. Now, that's the total payment. But what is good to keep in mind is the mortgage payment isn't only money down the drain, which it would be when it comes to rental payments, of course. That's money that you don't get back. So when you look at that part of your mortgage payments, what don't you really get back is the interest rate, right? Because that's something that you pay to the bank to use the money that they loan to you. We haven't included the tax benefit here, just to keep it a bit more simplified. So then basically, the interest rate for the first month is 1,650 euros. If you compare that to the rental payment, top of my head for this, it was 2,250 or 2,500 euros. But basically, there's a difference there, of course. Now, what the big difference between renting and buying is, as well as Ludo previously mentioned already, is that you also have to do an investment before when you buy a house. That investment is basically the buyer's cost. So it might be transfer tax, depending on your age and the purchase price that you go for. You pay the tax, you pay the cost for Expat Housing Network, Mr. Mortgage, the notary, the appraiser, and the translator. All will be explained later on more specifically, but that's basically the total amount of cost can lead up to around with a purchase price around this number, around 18,750 euros. So in this example, so you have an investment at the start of, let's say, a bit less than 19,000 euros, but you do have a lower cost in the end. So when do you earn back that amount? So when does it start making sense to buy a property? Now, the break-even point is one slide back, is 22 months, but you can keep it where you are. It's 22 months where it says. Now, it does then automatically make sense to buy a house when you're going to live in it for 23 months. Not necessarily. 2 years is kind of the bottom line where it starts to make sense. I would suggest, and correct me if I'm wrong, Ludo, but about, let's say, 3 to 5 years in that range, if you're considering living in a property, makes a bit more sense financially. How do you see that when it comes to the market?
Yeah, I agree. Starting from 3 years is when it becomes interesting also in regards to a return on investment and such.
Yeah.
Obviously, it depends on area where you're looking at. The city center of Amsterdam. Talking specifically now about Amsterdam, but the city center of Amsterdam is growing less rapid than the outskirts of Amsterdam. So it might be that in the outskirts of Amsterdam, your break-even point is or the return on investment makes more sense after 2.5 years already, whereas in the city center we're looking more towards 4 years.
Yeah.
Depends on that part, but
Yeah,
I would say 3 to 5 years.
Yeah.
Yeah.
And that has also to do because in this equation that is explained right here, hasn't been included a potential increase in value, right? So this is when the value would remain the same. Now, sure, over the whole of the Netherlands, you might have read online here and there that property values might decrease. Sure, we saw like this happening. I don't see a significant drop all of a sudden, especially in the larger cities. I mean, still, again, supply and demand, there's significantly more demand than there's a supply, and so I don't expect and see a significant decrease right now. So that's basically that. So we can go to the next one now. Thanks, Ludo. So basically, after 5 years. So let's say if we take that as a mark. So what happens after within those first 5 years? So when you buy a property, total amount of monthly payments, so that's the total monthly payment that you do, so the gross payment of 2363 that you just saw, total amount is a whopping 141,780 euros. That seems like a lot. Sure, it is quite a bit, of course. But what is very good to keep in mind, of this 141,000 euros, the equity that you build up is 49,000 euros. So from this 141, you save in your bricks basically 50,000 euros. Again, not included the increase, the gradual increase in value that you have in your property. So there will be more, most probably. So in 5 years, you save 50,000 euros just by paying your mortgage. Now, when you compare that to renting, then you pay 180,000 euros in 5 years and you get nothing back. So if you make that comparison, sure, then buying seems to be significantly more interesting, which it is in that sense as well. Now, does this go for everybody always? No. Make sure that you get an understanding of your personal finances, get an insight in what it actually means for you. Do you have the funds for the investment right now? Do you want to pay that fund right now? Do you want to build up a bit more? You might not necessarily want to or have to go to the max of your mortgage capacity as well. So be sure that you make the choices on valid information and just know what your financial situation is. So that's basically when it comes to the renting versus buying. So Ludo, I think you can take it from here, and I'll be back later.
Perfect. Thank you very much for that explanation, Robin. So. Well, we've all heard that the market has risen, significantly since 2020, even since the COVID pandemic happened. So let's first talk about what has actually caused the prices to increase. Of course, small disclaimer: market has been stabilizing a little bit, so we'll talk about that as well. But first of all, what has caused the prices to increase? We talked about this already a little bit. There are a few fiscal benefits at play. First of all, the transfer tax exemption, making it more attractive, especially for starters, to enter into the market and to purchase a property. The interest rebate or the interest deduction scheme, where you'll get a percentage back of the interest that you've paid over an annual, over your annual mortgage payments. There are no capital gains in the Netherlands, meaning that if you do sell your property with a nice profit, that profit is going to land directly into your pocket, or for a purchase or to another property or anything like that. But you do not have to pay any capital gains over that. And there is we call it in the Netherlands a tax-free parent donation. Now this is actually a family tax-free family donation. And this is the case when your family members are residents in the Netherlands, then they are able to donate a certain amount of money for a property purchase. This used to be 100,000 euros before 2023. Now in 2023, it's around 30,000 euros. In 2024, this will be off the table, and therefore it's ending. Now keep in mind, this is only if those family members are Dutch residents. If you have wealthy family members outside of the Netherlands that want to support you with the purchase of a property, then well, the Dutch state definitely welcomes that money, and you can receive as much as you'd like without paying any taxes over that. So that is very interesting as well. Now the low interest rates, of course, the interest rates have been very, very low, around 1.5–2%. They have been on the rise now, as Robin mentioned, 4.4, 4.5. They are still historically low. If you compare it to years like 2005 to 2008, where they were in the double digits, or if you compare it to countries surrounding the Netherlands, interest rates are still on a low level, and in my opinion, a lot more sustainable than the 1.5–2% that we saw before. Yeah, the interest rates are still seen as low, of course, have been a little bit higher than, let's say, 2 years ago. Now, this is a big one as well, the high rents, and with the expectancy that the rents will keep on rising, a lot more people are moving away from renting and deciding to purchase a property, which correlate immediately with the point that comes after. That's the lack of supply. There are so many more people looking for a property compared to the properties available, especially in the bigger cities, and the amount of expats that are coming to the Netherlands, with the increasing amount of single people that are purchasing properties compared to the past, where a lot of couples would purchase property, and now more singles are doing so. So because of this, a lack of supply is the case. Well, simple economics example or equation, when the demand is higher than the supply, the prices go up. And that was definitely the case the last couple of years. Now, the current market is a little bit different than the market of last year or the years before that. What we see is that the increase of interest rates has created a situation where specifically Dutch people became a little bit more risk averse. So wanted to wait out what this whole rise in interest rates were going to do. Which meant that there were less people on the market with the same amount of properties that were being listed, on the monthly basis, which created actually 80% more active listings. Well, this immediately resulted in being able to book more viewings, or at least being more easy to book a viewing, selling agents not working with deadlines anymore, room for negotiation and all that. So turning it a little bit into a buyer's market. I do have to say that February compared to January this year, we already saw a small increase in price again. So I don't want to start yelling here that it is totally a buyer's market right now, because unfortunately that is not the case, but it is becoming more attractive for buyers to enter into the market. Like I said, more room for negotiation and therefore also less overbidding. We'll talk about overbidding a little bit later on. What I mean with overbidding is not necessarily overbidding over asking price, but mostly overbidding over market value. But definitely a lot less overbidding. Now, there is still a lack of supply though, and this has mostly to do also with the high material costs. Since COVID and since the whole transport routes have been tackled a little bit, we see that the costs of materials have been on the rise, making it also more difficult for new build projects to get foot on the ground and start working, and with lesser new build projects being realized, the lack of supply is still an issue. All right, the closing fees, the finance fees, the purchase fees, how you want to call it, what you would need in savings to actually start the process of purchasing a property. First of all, the transfer tax, the thing that we talked about before. Typically, this will be 2% of the purchase price. Of course, you are exempt from paying it if you are under 35 years old, buying on or under 450,000, and using the exemption for the first time. If you are looking to buy a new build property, a new build project, then you are also exempt from paying transfer tax. Because, like I mentioned before, transfer tax is when ownership is transferred from a seller to a buyer. However, you would be the first owner, and therefore no transfer tax is applicable. But for the sake of the example, let's assume that transfer tax will be 2% of the purchase price. Now, we'll need to go to the notary as well. When buying outside of outside of Amsterdam, you'll only go to the notary for the mortgage deed and the transfer deed. When buying inside Amsterdam, you'll also go to the notary for the purchase agreement. So you'll have an additional cost of around 400 or 500 euros. But the mortgage deed is typically between 700 to 1,300 euros. Transfer deed between 700 to 1,300 euros, depending a little bit on where you're going to the notary. Now, if you're working with a consultant from the bank or with a mortgage broker, those advisory costs will typically be between 1,500 euros to 3,400 euros. Our costs 0.75% of the appraisal value or 1% of the appraisal value, depending on the package that you move forward with. We'll show you this a little bit later on as well. Now, if you need a mortgage, then you'll automatically need an appraiser. An appraiser is someone who comes into the property to officially determine the market value. Of course, I, as a buying agent, will do my research and already tell you what the value is, but the bank will not take my fancy Excel sheet as as total proof. They need an appraiser to come in to write a full report, put a stamp on it, and everything. That is typically between 700 to 900 euros. Small disclaimer here, luckily my research and the research of the appraiser is 99% of the time pretty much are exactly the same. So that is
He's not just saying that, it's actually true. So yeah.
yeah, very, very happy with that, luckily. A technical inspector, not something that is obligated, but especially if you're buying into older cities like Amsterdam or Utrecht, we advise you to have a technical inspector come in and well, technically inspect the property. Typically 465 euros. Then we have an interpreter that needs to be present when signing the mortgage deed and the transfer deed, unless you master the Dutch language. If you do not, by law, a sworn-in interpreter needs to be present to translate everything during the appointment. When purchasing a property, there is one obligation always that you need to fulfill, and that is making a deposit. This deposit is always 10% of the purchase price. Now, you can either make this deposit out of own funds, but assuming, or we can definitely make the assumption that not everyone just has 10% in their pocket willing to spend and have in the account of the notary for a couple of months. So what you can also do is have the bank make the deposit on your behalf. And this is called a bank guarantee, and that is typically 250 euros or 1% of the guaranteed amount. Now, the NHG that Robin touched base on, the National Mortgage Guarantee, the insurance that you can take out, and therefore also get access to cheaper interest rates, you pay a one-time fee of 0.6% of the mortgage amount. Now, we have a third column with the question if it's tax deductible or not. Now, what we see is that everything that correlates with money, pretty much, or with mortgages, is tax deductible. So this is the mortgage deeds, the advisory costs of the bank or the mortgage advisor, the appraiser, and the NHG costs. If the bank needs you to have a technical inspection, for example, when you're buying a very old property that is falling apart or that needs a full renovation, and the bank sometimes wants you to technically inspect the property, then the technical inspection would also be tax deductible. If you're doing it only for yourself, then unfortunately not. All right, let's talk about some tips to win in the current market. As it is still rather competitive, it is nice to know what could be of added value during the process. Now, a very important one, that is the market value that I was talking about, the value. So I like to work from examples, so let's do that here as well. We have a property listed by Hopma Makelaardij, in this case listed for 395,000 euros. That is the asking price. That is an invitation to go to a viewing and potentially make an offer afterwards. So we see that the asking price is 395. After doing my research, my price research, we see that the market value is actually 415,000 euros, not 395, but 415,000 euros. From this moment on, we also disregard the asking price, because what we see, the asking price is not a good representation of the market value, and is just a price or a strategy that the selling agent uses to get you into the property. Because if the asking price was 405, but you put a budget for yourself up to 400, you would have not gone to this property. Whereas now you might have fallen in love with the property and therefore will go to a family member and say, hey, can I please borrow an X amount to actually make an offer on this property because I love it so much. Well, in this example, the property is very, very popular. We're not the only ones that want to make an offer. So actually to purchase the property, we have to make an offer of 435,000 euros. What we see a lot is that it is communicated that the overbid is 10%, because the difference between asking price and purchase price is 40,000 euros. In other words, roughly 10% of 10% overbid. Yeah, I don't like to use this number because, like I mentioned before, the asking price is doesn't really say anything. The selling agent could have listed the property at a much lower or a much higher value. So that overbid percentage is not a steady number to use. What I use is the 4.8% here, and that's the difference between market value and purchase price. So what we see is that the overbid is actually only in brackets, of course, 4.8%. Now, what could also happen is that instead of Hopma Makelaardij, a different agent listed the property, in this case for 375. Market value is still 415, purchase price still 435. What we then would see is that the overbid is 16%. Well, again, like I just said, it's not a really good representation, because in real life, the overbid is still the 4.8%. So this is why we want to know the market value, or why we only look at market value, and based on the market value, we come up with a competitive offer. Because if we added 20,000 euros over the asking price, we would not have been able to purchase the property. And the bank will give you up to 100% of the market value anyway. So not the asking price, not the purchase price, but the market value, keeping in mind that you will, of course, need to have enough income to meet the market value. But the bank will give you, in that case, up to 415,000 euros. Now, we also see in the current market that things are turning around a little bit. So what the agent could also have done in this case is list the property at 450,000 euros. Big difference. But we see that happening now as well. Asking price 450. I do my research and it seems that the value is actually 425. It could have also been 415, but for the sake of the example, we'll put 425 here. The purchase price is then still 450. Now, what we see here is that it seems that the overbid is 0% or the underbid, however you want to see it, but there is no overbidding. Whereas actually, in my view, there is still overbidding because there's a difference between 425 and 450. So there's an overbid of 5.5%. Now, it could have also been the case that the asking price is 450, the market value is still 425, but we purchased the property at 425. Now, this is the ideal situation. It seems like we underbid 5.5%. In my opinion, not really the case. We purchased the property at market value. There's an overbid or an underbid of 0%. The most attractive situation is, of course, if we buy under 425, but in the competitive market that we're in, we don't see that happening a lot, of course. So this is really why market value is an important value to know, something that we as a buying agent will communicate with you before we offer or before we make an offer, so that we have a value that we can base a competitive offer on. Then what does a winning offer look like? Funny enough, a winning offer does not always mean offering the highest price. Now, why do I say that? If we, and then I like to work from examples, as I just mentioned. Let's go back to this one. So if we see here that the market value is 415 and we make an offer of 500,000, yeah, of course we can do so, and the sellers would be happy to receive 500,000. But if we say to the sellers we also need a mortgage of 500,000, yeah, the bank is never going to give that to us because the market value is 415. So even though we have a very high offer, it is not a very secure offer because the amount of mortgage that we need is not a realistic amount. So either we say, okay, we know that the market value is 415 and we'll add 85,000 euros out of own pocket to come up to the 500,000. Yeah, that wouldn't really be a smart offer because offering 85,000 euros over the market value out of own pocket it's going to take you a long time to earn that back. So it would make a lot more sense to offer a good value, and that is what we see here, offering 435. So saying, you know, we are able to offer 20,000 euros over the market value out of own pocket, but we only need 415 out of a mortgage perspective, and knowing that the market value is 415. So that is what I mean with offering a good price. Again, immediately correlates with the second pulling point, which is offering security to the seller. And this is saying that you are not depending fully on a mortgage provider, for example, or in other words, saying, I need this from a mortgage provider and will add X amount out of own pocket. What you can also do, and some of you might have heard that, is putting in or taking out the financial clause. And financial clause is pretty much an insurance that says, if I cannot get X amount from a mortgage provider, I can cancel the purchase without any financial consequences. Now, this is, of course, for a buyer, a very nice insurance to have, but you are still giving some kind of risk to the seller. Even though you've signed the purchase agreement and your offer is accepted, etc., there is still a chance that you will not go through with the purchase because your financial situation is not a very secure one. If you're able to provide documents, for example, from Robin that states, I, Robin, am very secure that my clients can get a mortgage, that will already increase the security that we can offer to the seller. What we can also do, and that is the biggest one, is potentially take out the financial clause, where we say, I am so secure about our financial situation that we are 100% sure we can get a mortgage. And therefore, you pretty much take out that insurance. Now, of course, there is a risk that even if there's a small chance that you cannot get a mortgage, the purchase will have to go through even though you cannot get your mortgage in play, and therefore you need to pay a penalty of 10%. Well, that is something that you want to avoid, of course. So the only way that we take out a financial clause is with approval of your mortgage advisor, and with the correct documents that we can show as well. Now, the third one, offering least amount of hassle. What we mean with that is primarily taking out a technical inspection clause. I will only do this if the property is built in the last 10 years or so, where it's pretty sure the property is in a good condition. Otherwise, I want to keep this in. Luckily, a lot of selling agents don't mind this too much, especially in older parts like Amsterdam and Utrecht, as I just mentioned. Now, the final one, that is something that has become more and more popular in the last couple of years, where a lot of investors were buying up properties and renting them out immediately. We saw that a lot of sellers that have used the property and for a long time and have put a lot of love in the property and know their neighbors quite well, that sellers prefer to sell to someone that is going to put just as much love in that property again and will create a bond with the neighbors as well, etc., etc., instead of selling to someone that is just going to make a quick buck on it. I've had cases where we actually offered 5,000 euros less than the highest offer, but we're able to offer such a personal touch and explain who we are and what we're going to use with the property for, that the sellers decided to move forward with us and leave the property in good hands instead of just selling it quickly to an investor. So it can really make a difference. And then the final one, that is doing your due diligence. Now, this is the technical inspector that I was talking about and the appraiser. Again, technical inspector, the person that is going to technically inspect the property, the roof, the walls, etc. Make sure that there's no moist behind the bathroom tiles. Make sure the property is in a good condition. And then the appraiser, making sure that the value of the property is in line with what we were expecting. Making sure that we don't have to overbid out of own pockets too much. And make sure that we can afford it pretty much. Now, I have a question for you guys, and feel free to pop that in the chat. Do you think we book these inspectors before or after our offer is accepted? I'll give you guys a few minutes to pop that in the chat. Do we book them after, or do we book them before our offer is accepted? I see a before coming in. Ooh, oh, well, you guys are lucky. Pressing too much. So, well, I see a few befores coming in, but I spilled the answer already. The answer is actually right after the offer is accepted. Now, why is that the case? As I mentioned before, unfortunately, the technical inspector and the appraiser don't work for free. Technical inspector around 465 and the appraiser between 700 to 900 euros. Well, you can imagine that in a competitive market, you won't always get your first offer accepted. And if we have to spend so much money on technical inspectors and appraisers without even moving forward with a property, it's a waste of money. So we prefer to book the third parties right after the offer is accepted. To make sure that if there's anything that is not in line with our expectations, we can still pull out, but we only use these services in the moment that we actually have the offer accepted. Now, in the Netherlands, once your offer is accepted, you're actually not legally binded to move forward with that purchase. Only from the moment that you sign the purchase agreement, you are tied to the purchase. Now, there's typically between 1.5 to 2 weeks between getting your offer accepted and actually signing the purchase agreement. So between that 1.5 to 2 weeks, there's time to do our due diligence. So let's say we do it right here. We book them right here. They come in right here, and then we receive the report right here. And it seems that the property is all okay, but in the report, it says that the roof is having huge issues and that we would need to replace the roof for an amount of 20,000 euros. Yeah, I can make the, or I can totally understand that you do not want to proceed with the purchase then because you were not expecting these costs. So that would be a valid reason to actually pull out without having any financial consequences. Now, from the moment that you sign the purchase agreement, that is when you're tied to the purchase. However, as a private person purchasing a property, you have an additional 3 days reflection period or a cooling off period where you can still pull out without giving any reason. Now, this is only for a buyer, not for a seller. So from the moment that both parties have signed, only a buyer can actually pull out for an additional 3 days without giving any reason. To give you a little bit more of a broader timeline, to see how the purchase process actually fully goes. We'll start over here, the fully start of the search. You'll be looking on Funda to make sure that you see all the properties that are listed, and if anything is listed that meets your requirements, you'll book a viewing, you'll go to the property, make sure that everything that is listed on Funda is also actually the case at the property. Assuming that you want to make an offer, that would be a cue towards Expat Housing Network or to me to do some research, the property document review, checking the medical file of the property, but also doing the price research, making sure that the value is in line with our expectations and with our budget. So as you see, a lot actually happens here while the space between these two bullets are not that big. A lot happens. We'll define a offer from that moment on, come up with a competitive offer. We'll be in touch with the selling agent to make sure we know what the wishes are from the sellers, what kind of offers the selling agent might have in, and to pretty much gauge the interest. Now from there on, we'll submit the offer. We'll sit like this for a couple of hours to hopefully get some good news. Assuming that we do get good news, we enter into the timeline that we saw in the slide before. So the 1.5 to 2 weeks due diligence time, get the appraiser in, get the technical inspector in, and then eventually, if we're in Amsterdam, we'll go to the notary to sign the purchase agreement. If outside of Amsterdam, we'll get the purchase agreement from the selling agent. Well, we'll sign the purchase agreement, and that is the moment that you can apply for the mortgage together with Robin. You can do this already in the 3-day cooling off period, so you don't have to wait until the end of the 3-day cooling off period. We actually advise you to do this as soon as possible. So if you sign at 11 o'clock in the morning, you'll receive the digital copy at 12 and then immediately send it to Robin together with all your other information, and then the application can begin. Now, that process mentioned here is on average around 3 to 4 weeks. However, Robin and his team can do it a lot quicker, between 1 to 2 weeks, especially if it's a rather straightforward application. So another added value of working with Mr. Mortgage. Now, at this moment, we'll have the mortgage application approved. We'll have the property secured, the financing secured, so not a lot can go wrong anymore from that moment. We'll have to wait until the actual transfer date. This has been agreed upon already when signing the purchase agreement, between 1 week and 3 months after getting your mortgage application approved. Now, around 1 or 2 weeks before the transfer date, we'll receive the statement of completion, which is a fancy word for final invoice. This invoice has the transfer tax, the purchase price, the municipal taxes, my costs, Mr. Mortgage costs, legal and registry costs, etc., etc. You'll pay that directly to the notary, and then the notary will pay everyone accordingly. So that makes your life rather easy. On the day of transfer, we'll first go to the property for a final viewing or for a final inspection. Make sure that the property is still in the same state as we've agreed upon. All the walls are standing, the property is broom clean, and all the movables that have been agreed upon are still there, the furniture pieces. But all the furniture pieces that have not been agreed upon are also out of the property. Now, if that's the case, then we'll go to the notary, we'll sign the transfer deed where you actually get ownership, and we'll sign the mortgage deed where you're officially in debt with the bank. And that's when you get the keys of the property, and well, then it's yours. You're ready to move in and start your life there. Now, typically you have around 2 months of a liability term afterwards, officially 2 months, but we always say use the property extensively for the first 2 weeks already. Open all the windows, turn on all the radiators, all the faucets, etc., etc. Because the longer we wait, the less leverage we have with the sellers to actually have them come in and fix things that should have been working. Now, this process, there are a lot of variables, of course, but this process typically takes between 3 to 8 months. Can happen a lot quicker if you are not relying on a mortgage, for example, or already have an offer accepted and can hit the ground running. If you only do a viewing once every 3 weeks and are very, very picky and are taking big breaks in between, or the sellers need a lot more time to actually move out and still need to purchase a new property, then the process can take a lot longer as well. So a lot of variables, but I would say between 3 to 8 months on average. Okay, all right, then let's move on to some FAQs. We always get a bunch of questions that are very similar in these webinars, so we've summarized them and we'll go through some FAQs. And then if there are any questions unanswered, please do pop them in the Q&A and then we can go over them live. First question for you, Robin. Is it possible to get a mortgage with a temporary contract or as a freelancer?
Short and sweet, yes. For both, basically. A bit more context there. Let's start with the temporary contract. Banks prefer stability and predictability of your income for the foreseeable future. So basically, they prefer you to have an indefinite contract. Now, when you do have a temporary contract, and in any case, whether it's definite, indefinite, or temporary, with a mortgage application, we always need a so-called employer statement. This is basically the employer confirming what your contract status currently is, and what your income is, what their information is, what your information is, what your term of your contract is as well. Now, there's a nifty little additional box they can tick, and that's the employment continuation statement. This basically states that the employer says, okay, sure, we very much like the way this person is working, and we intend to keep them on after the temporary contract has ended for an indefinite period. If that's that box it ticks, then the bank is perfectly fine and they will consider your temporary contract as an indefinite income, which makes the mortgage application much more interesting for the bank, and you have a larger mortgage range. Now, would your employer do that? Usually, yes, because it's not a legally binding document, so they can sign anything on there, and the bank knows this. That's not legally binding, but it's still sufficient to be able to consider your temporary contract as an indefinite income. That's very nice. So that has the preference. Now, if that's not the case, there are still possibilities that if you have a temporary contract that you can do that. So in some situations, there's no option for you to get in declaration of intent. So this box is ticked. For instance, when you're a PhD student, it's well known that universities do not give this declaration of intent. still there are sufficient banks that do allow your income in that sense. So by all means, if you have a temporary contract, check in with your financial advisor, or just give us a call or schedule a call with us, and we'll be more than happy to give you insight on what your specific situation would be. So temporary contract, sure, a lot is possible. Just make sure that your paperwork is in order. Now, when you're a freelancer, the situation is a bit different. So when you're employed, the bank looks at the future, right? So what is your contract going to be? What is your income going to be? When you're a freelancer, basically an entrepreneur or a company owner, it's all considered the same. They look at the past. So what is your what have you done as income? What have you? What were your results in your income over the last couple of years? Now, when you check it online, you'll see that you need 3 years of history of your company here in the Netherlands. Not necessarily true. 12 months is sufficient, but you do have to have your company registered in the Netherlands at the Dutch Chamber of Commerce for at least 12 months. So that's something that you need to do, and then we can use your average income to base your mortgage capacity on. So being a freelancer, no problem. Have 12 months, then we can use your income. Now, if you have the specific situation that you moved your own company from abroad to the Netherlands, then you will want to continue your income here. There are also possibilities then under very strict options, regulations, we can even include your income already when you have 6 months of registration here in the Netherlands, but there's always has to be some base of history of your company in the Netherlands, because basically the bank wants to know, sure, you had a company before, or you know what you're doing, but they always want to know that you are a good entrepreneur in the Dutch market as well. So at least 6 to 12 months of history of your company here in the Netherlands, and then your income can be considered here as well. So that both, yes, just know what you're doing.
Perfect. Thank you very much. Very clear.
Sure.
All right, then question, what happens if you want to leave the country after several years? So a few things. First of all, easy one, keep your home, but have the mortgage cost as well. You are not forced to sell property if you don't live in the Netherlands. Keep in mind, though, that you will need to keep paying your mortgage installments, and you will also need to keep paying property taxes and such. Then the second one, it's possible to rent out your room or your home. Keep in mind, though, that you will need to change your mortgage type from a residential mortgage to a buy-to-let mortgage, as one of the standard conditions that is always in your mortgage contract is that you are not allowed to rent out the property without prior permission from the bank, and that you will not be able to rent out your property under the residential mortgage. So you will need to change that. But if you do have permission from the bank and you've changed to a buy-to-let mortgage or a investment mortgage, then you are definitely allowed to rent out your property. If you have a property in a homeowners association, so you have an apartment in a bigger building, then you might also need permission from the homeowners association, especially for short-term rent. That is 9 out of 10 times not allowed in homeowners associations. Long-term rent is typically allowed, but you will need permission. And then number 3, option that is always available, and that is selling your property without any penalties or capital gain taxes. If you get some nice profit, you put it in your pocket. If you make a loss, yeah, that is up to you, but you're always allowed to sell your home. Only condition is that you have ownership of that home. So theoretically, you could receive ownership today and sell it tomorrow. Not the smartest advice, but it is a possibility. Then, yeah, is it possible to rent out your house or a part of your house? I'll take this one as well. As I just mentioned, it is definitely possible. A lot is possible. Of course, if you are thinking of renting out your home, then you will need permission from the bank and change your mortgage type. There is one thing that is very important to mention. A lot of municipalities in the Netherlands have a self-occupancy obligation, and that is the obligation to use the property for your own residence for the first X amount of years before you can use it as an investment. This obligation came into play to keep properties available for people that actually want to live in it, starters primarily, and not have all the properties being bought up by investors. Now, there are a lot of different regulations there. For example, in Amsterdam, the WOZ value, it's up to 512. And you can own, or you have to use the property for the first 4 years. After that, you can rent it out. So let's say the WZ value is 400, then you have to use the property for own residence for the first 4 years, and after that you can rent it out. If the WZ value is 520, you can immediately rent it out already. Now, the WZ value is not a good representation of the market value. So it might be that the WZ value is 400 and that the purchase price is 525. Yeah, then you would, it would look like that you're buying over 512, but the WZ value is actually lower than 512. So therefore you would have to use the property first as your own residential property. So that's if you want to rent out your whole house. If you're renting out a room, it's a little bit more, or a little bit easier, I would say. You will still, or the bank would like to know, but the bank would mostly want to know that you have a good agreement with your roommate, because it's very easy for tenants in the Netherlands to get tenant rights. They get that very quickly, and once a tenant has tenant rights, it's very difficult to actually kick them out of the property. So if at one point you want to sell your home and your tenant is like, I'm not leaving, I like it here too much, I'm not paying so much, I'm not going anywhere, then it's very, very difficult to actually kick them out, and you will most likely have to sell your property with a tenant in it, and that will result in a much lower purchase price. So good to have an eviction clause in the rental agreement that you have with your tenant, which states that you will inform the tenant, let's say 3 months before you want to sell it, or something like that, or even have a first pick clause in there that you that the tenant is able to purchase the property first, that you will first offer to your tenant, things like that. But have a proper agreement with your tenants. That's important to mention. Anything you want to add, Robin, to that from a financial perspective?
No, that's basically it. You covered basically also the financial aspects of it. It's again, it's indeed true that the bank wants to know that they can actually, so they might say, okay, sure, we're worried that you might not get the money back if you want to sell the house, but they mainly consider that they don't get the money back if they might have to sell the house for you if you rent out a room. Indeed, rent out your entire house. Possibilities galore. Definitely just make sure that your mortgage is adjusted correctly based on the situation. Rent out a room, definitely possible, and consider that the rental income that you get for renting out your house is not taxed as of yet. Renting out your room will be taxed to from a certain point upwards in your income tax, but that's basically it. Just again, make sure that before you do anything here, be well informed about what you're doing. So yeah, that's again, I cannot stress that enough. Anything that you do, know what you're doing, and then you're good for sure. So definitely possibilities there.
And that's good advice for the majority of things in life, I think.
Right?
Yeah,
True. Yeah.
For sure.
Living on the edge can be nice. Just well, yeah.
Exactly. Well, thank you, Sensei. All right, then the 10% deposit. What is the 10% deposit I need to complete? Well, I explained it already a little bit before, but when buying a property, the sellers, they have a property that they're selling, they have a collateral that's hanging behind them, so to say. So if the purchase does not go through, a buyer pretty much can just leave and doesn't really have any strings attached. A seller still has a property that they would have to relist on the market, and well, it's annoying if a purchase would not go through. So at one point, the 10% deposit came into play for the buyer to complete, pretty much as an incentive to go through with the purchase. Typically 1 week after the financing has been secured, the mortgage has been secured, you would also make a 10% deposit. So, like I mentioned before, either from own savings or from a bank guarantee. I think there's a timeline here. Yeah. So mortgage application is approved right over here. 1 week after that, you would have the deposit. Now, why is it not before? It doesn't make sense to have a transaction happen if the purchase can still be cancelled due to a financial clause that you have in the contract. So if the if you have a financial clause saying I need an X amount of mortgage from the bank and the bank cannot give you that, then you can cancel the purchase without any consequences. It would be a little bit too much of another handle. If you've already made a deposit, the deposit has to be paid back. Sometimes in the past, there was also negative interest on the deposit. So that would just be a headache situation. So that's why they say, okay, 1 week after your finances has been secured, then the deposit is due. Now, sometimes after this period, we still have another 4 months before the transfer can actually happen. Now, a buyer can, in theory, flee the country, move to Panama, and never show themselves anymore. Then the Dutch court can also not go to Panama and ask you to come back and pay. So in that case, the sellers would be left with their collateral, with their property, would have to relist it, etc., etc. Now, if you've made a deposit of 10%, if you're buying a property of 500,000 and you've made a deposit of 50,000 euros, yeah, there's a small chance that you're actually going to flee the country because that's a lot of money that you would be leaving behind. So that is what the 10% deposit is, another incentive for the buyer to stick around and fulfill their obligations. Then our fees, very good to know. I'll start. We have 3 packages at EHN: Smart Package, Complete Package, and the New Build Package. Typically for you guys, I think the Smart Package and the Complete Package will be of most interest. To explain the two, so the Smart Package, a little bit more for the independent buyer, someone who is already familiar with the Dutch housing market, who might have already purchased a property before, for someone that does not mind spending a lot of time on the process themselves. Here we are more of a remote consultant, so you'll see me a lot, but only via Google Meets or via Zoom. You'll get an intake, of course. You'll get access to a personal buying manager, so you'll have someone to fully support you during the process. We'll do a property document review, so we'll make sure that the medical file of the property is in good state. We'll do the price research as well, make sure again that you know what the value of the property is. We'll submit the offer on your behalf. We'll review the contract for you, make sure that everything is legal up to expectations. We'll also book the third parties, so the technical inspection, the appraiser, and the notary. And we'll be there between the signing of the purchase agreement and the signing of the transfer deed and the mortgage deed, so the end of the process. That is 0.75 of the appraisal value. All our costs are including VAT. Appraisal value, obviously something that is determined by the appraiser. So again, not something that we have impact on. Then we have the complete package, more for someone who is not so aware of the Dutch housing market, who could use the extra help, and who is totally new to the whole buying process in general. Here also we'll have an intake. Of course, you'll have access to a personal buying manager, but we'll also schedule the viewings for you. We'll also attend the viewings, so I'll be there to answer any questions that you might have, but more importantly, in my opinion, also ask the right questions to a selling agent. We'll be able to determine a structural crack from a cosmetic crack, make sure that the homeowners association is okay, see if there's double glazing and if it's not leaking. Well, all that kind of stuff that is important to know. Of course, we'll do the property review. So again, property document review and the price research, submit the offer for you, have the contract review, third-party bookings, and then we'll also actually attend the third parties as well. So the inspection, the notary, and then the notary again at the end, where we'll be there for the transfer. And we'll actually offer some post-transfer support as well. So not just the pre-transfer, but also post-transfer. If there's anything that pops up after the transfer, you can always reach out to us and we'll pick that up with the selling agent or with the seller. This is 1% of the appraisal value, again, including VAT. Then we also have a third package, new build package. Obviously, this is very different as we cannot go to a viewing or go to a technical inspection or anything like that. So you're pretty much buying a property out of a catalog or from a brochure, so that process is different. We'll do a search and registration for you there as well. We'll attend the appointments with the selling agent or the developers. We'll review all the documents, make sure that all the checklists and points of attention are met. We'll do a price benchmark, offer negotiation if possible, and then of course the contract review, pre-transfer support, and the booking of the third parties. That is 3,450, including VAT as well. What's good to know is that we ask a deposit payment of 499. That is a deposit payment which is non-refundable, but the rest is no cure, no pay. So we're sticking around until you find a property. If for some reason you decide to stop the process, or you want to move on to a next adventure, you get a job job offer in another country, fantastic. Then it's only the deposit that is due. That's it. Pretty straightforward. 3 packages to choose from. Robin, your costs.
Yes. Well, there they are. Basically, we have 4 basic situations where you buy a residential property. So when you buy the house that you want to live in, basically, a fixed fee of 2,999 euros, or less of a tongue twister, 3,000 euros. Buy to let 3,200 euros, because it's a bit more work. Banks will take more time. Same applies for when you buy a property of over $1 million valuation as well. So when you buy the house for over $1 million, then banks will need more time. The application takes more time. The banks will need more information and more guidance in the application in the end. When you increase your mortgage or adjust your mortgage, basically, so when you want to do a renovation of the property that you already own, or you want to increase to benefit from the equity that you build up, and you want to use that for investment, or you want to go on holiday, or you want to go onto a big square and give it out to everybody else, that's all good. There's also an option. That's also something that will help you with, because basically that's also considered as a new mortgage application. So these are the costs that we charge. Now, what do you get for that? It's basically a guidance from A to Z. So from the moment, again, that you start considering, should I do something? Do I want to do something? We'll always start with an introductory call. There's usually about 15 minutes where we discuss basically what your situation is, what you want to achieve, what your goals are, and a quick eligibility check to say, okay, sure, based on the information that we have, is it actually feasible for you to achieve the goals that you're looking out for, what that you want to achieve in the end? So that's a preliminary check. If we pass that, if we say, okay, sure, yeah, it kind of makes sense to dive into this, the next step would be a financial analysis. So short call, financial analysis, and this is where we really dive into the matter, right? So this is basically what we do, what the banks do in their mortgage assessment. Why we do this that extensively is because we don't want to leave it to a black box at the bank, so maybe the mortgage gets approved. No, we want to give you reassurance at right from the start that you know, okay, sure, I can close my mortgage, no problem. We just have to get it done. We just have to jump through a couple of administrative hoops, and that's it. So we do the financial analysis at the start. That's something that we'll discuss in a next call of about 45 to 60 minutes. So we have all the time to really dive into the matter. So what your options are, what different scenarios, and how long you want to fix your interest rate for, how much of your savings do you potentially want to input as well, what makes sense in your monthly payments. All of that is something that we'll discuss, and that's kind of the start sign to continue our service. So introductory call, financial analysis that we do based on the documents that you upload, and then the big call that we discuss everything. And then from that moment, you can continue looking out for properties and start your house hunt or continue your house hunt, for instance, with one of these guys. We'll guide you through that process as well. Not as a buyer's agent or a real estate agent, that's where I leave it with the expertise again of these guys, but we'll walk you through the financial side of things. So every property has different specifications, right? So especially when you buy a house in a larger city or where you buy an apartment, you have to consider the energy rating. You have to consider the fact that you might have to pay ground lease on the property, or if you buy an apartment, you'll be part of the homeowners association. So that's all the owners of every apartment in the building combined together. That's an association, and they have to comply to a certain set of rules and regulations depending on what bank you go with as well. So all of that is something that will guide you through. So each and every property that you like, before you do the viewing or after, I'll leave that to you. I can do the recalculations. So basically, when you like a property, you already know if you can secure a mortgage before you put in the offer. And then, of course, we'll discuss with these guys how we can optimize your offer. So do you need a financing clause in the offer? If so, if it makes sense to leave it out, do we think it's financially responsible to do that? If there's any hint of any financial risk, I will tell you, I might advise you to don't leave that financing clause. It's obviously in the end up to you. I'm your advisor, I'm not your choice maker, but basically so you know exactly what you're up against every time that you want to make a choice. Doesn't matter how long this takes. If you find a house in 2 months, well done. If you find a house in 2 years, all good. By all means, I hope it will be sooner for you guys, of course, but it doesn't really matter when it comes to our service. We don't charge extra for speaking English. I just paid attention in school and that worked out perfectly fine. We supply translations of any bank documents. We don't charge extra for that. I mean, it all just makes sense to understand what you're signing and what you're getting yourself into. So that's all included in our fee. We have a small down payment at the start of 299 euros so 300 euros to cover the hours that we put in, and that covers the whole process for the down payment. So one-off down payment, and only at the very end, the remaining amount of the fee is due. So for instance, when you buy your first home, the total fee is 3,000 euros. You start with 300 euros at the start, and only at the very end, if you buy a house, and when we get the mortgage sorted, then the remaining fee of 2,700 euros is due. Again, no cure, no pay. So that's basically it. Now, one thing, just to annoy Ludo, is that our fees are tax deductible. So you get back about 37% of our fee. I'm still rooting for you guys, by the way, that your fee will be tax deductible, because I think it makes sense. But as of yet, this is a situation. So by all means, benefit from any benefit that you can get from the tax authorities, of course. So that's basically it.
Exactly. Well, at least one of us has it. I hope indeed in the future that our costs will also be tax deductible. Keeping our fingers crossed for sure.
Yeah, for sure.
Okay, all right. Then right before we go to the Q&A, I would like to launch one final poll just to see what your experience was. Oh, there we go. Launch this poll. Yeah, so just to see what your experience was. If you missed anything, what you would potentially like to get more information on. And then we'll head right into the Q&A, or the questions that we still have left. If you do have questions that are unanswered, please pop them in the Q&A now then, so we can go over them. If there is anything that you missed, of course, then feel free to also schedule a call with us right after or whenever you're available. You'll receive a link tomorrow or Friday also with a link to our website, so you can do so. See some nice numbers coming in. Fantastic. That is always good to see. Perfect. All right. Thanks very much. Cool. Then I'm going to end the poll and let's move on to the Q&A. Rick, would you like us to help sites?
Yes, yeah. First of all, for some reason I had to rejoin, so I think 2 questions were in the Q&A that I did not answer. I don't know if you can see them, but there's some others coming in. The first one is for Robin. If you sell your house, do you have to pay any penalties on paying off your mortgage?
Yeah, very good question. Well, quick and easy, no. If you repay your mortgage by selling your house, no bank will charge you a penalty. You can repay, let's say you have a mortgage of 450,000 euros and you sell the house for 500,000 euros. 450 will be used to pay off your mortgage, penalty free. There's 50,000 euros left, and as Ludo already mentioned, there's no capital gains tax, so the 50,000 euros is just yours to do with whatever you like. Of course, if you buy a next house, there can be tax implications. Again, just be well informed. But that's basically it. You don't pay taxes over the profit that you have, and you don't pay penalty over the mortgage that you repay.
All right, thank you. Ludo, question for you. With the complete package, how many viewings do you attend with the client?
Yeah, fair question. So currently we will attend 10 viewings. Now 10 should be more than enough to find a property that is actually that meets your requirements. Why 10? Also to give you an incentive to be picky on the properties that we go to. At one point during COVID, we had a lot of viewings of people that just wanted to leave the house. We said, okay, we need to do something about that. So at 10 viewings, What you can also do is go to a viewing yourself, have me come for the second viewing, we can play around a little bit with that. I'm totally sure that after the 10th viewing, you are totally comfortable and confident doing the viewings by yourself. Of course, you can come or you can ask me to come to viewings afterwards as well, and we charge a small fee for that. So either way, but currently at 10.
All right, thank you. Then another question, and I think both of you can answer it. Due to the increase in the interest rate, does it still make sense to buy a property instead of renting?
Sorry?
Yeah.
Yes. That's basically it.
Thank
So,
you.
yeah, no, but it's honestly. So I'm not just saying that. If again, in your particular situation, it's always a very personal thing. So, what is good to know? Higher interest rates is relative. Let me put that first off. So, and when we consider the peak of the interest rates increase, that was last December, January, it was around 5%. There's a fair reason for that, by the way, because that's around holiday season, and banks artificially increase their interest rate as well, just to give a bit of breathing room for their colleagues, so everybody could take time off. So there's a mindset of the business mindset there as well. Now, that being said, we can see gradual decrease of the interest rate now happening as well. Will it go down crazy suddenly? No. Maybe it's, so we can kind of see a wave now of about 0.12 up and down. There's no way of predicting the market. Still, with the interest rate that we are in right now, the comparison that was shown before with renting versus buying still makes sense. Still, the break-even point is around 22 to 24 months. When you consider the investment that you do to buy a house and you compare that to the rental payments versus mortgage payments. So yes, it still makes sense from a cold financial perspective. Yes, you save money for sure if you buy a house on the long run being 2, preferably 3, 4 years that you live in the house. So in that sense, for sure, again, have your personal situation checked and see if it actually makes sense for you. Sure, again, I cannot stress it enough. We won't force you to buy a house or say things to make you buy a house. I would prefer you to be a happy client in 2 years when you buy a house than you are now kind of a noise client because you had to buy a house. So just make sure that it makes sense to you. Again, cold perspective from the financing point of view, yes, it still makes sense for sure.
All right, thank you. Ludo, question for you. There's some new rent restrictions announced for the rental market. Can you explain how this affects the market, or if you see any changes?
Yeah, sure. So, well, there's a new point system. To explain that a little bit, that properties can be measured via a certain kind of point system, where the amount of rooms, amount of heated rooms, amount of facilities in the building, well, a whole bunch of things, they all correlate with a point or with 2 points or 3 points, and your property at the end of the calculation has an X amount of points. If you are under a certain limit of points, you fall out of the free market and you fall into the social housing market, so to say. And once you fall into the regulated market, you cannot ask more than an X amount of rent per month. Now, the limit amount of points has gone up or will go up starting from 2024, and therefore a lot of properties that are currently in the free market will fall into the regulated market. Because of this, it's a lot less interesting for a lot of investors or landlords to keep on their rental property. So what we see now is that especially the smaller properties are going to hit funda in the coming months, or at least before 2024. So there will be a lot more availability, a lot more offer on the market in this specific sector of property, so to say. So it is, it doesn't necessarily have to be a good thing for the rental market either, in my opinion. I think there are a lot of opinions out there about this system. But what we see is that in the regulated market, because less rental properties are on the market, the not regulated market, the prices are going to probably rise even steeper. And because of this, also for a lot of investment companies that are generally building big apartment buildings and renting it out, it's also the return on investment is also not as high for them. So they're deciding now to not invest anymore in these kinds of buildings. So I'm not sure it is a total positive positive development. I think the bugs need to be tweaked a little bit in this whole new system, and they're definitely working on it now. But yeah, what kind of impact it will have on the market? I think on the short term, a lot more properties will be available that currently fall in the free market, but that will fall in the regulated market, or from a purchase perspective. Then I hope that answers your question. But it's a difficult topic. It's there's a lot of inside out and things that still need to be tweaked to make sure that it's is actually positive for everyone.
Thank you. A question for you, Robin. What are approximately the fees if you change from a, let's say, residential to an investor's mortgage?
Well, really depends. So let's split these costs up. So first off, the cost for people you work with. So we charge a fee of adjusting your mortgage of, that's not an increase and it's not a buy to let, but it's an adjustment, and that's 2,900 euros, so 28.99. That's our fee. Again, 300 euros down payment, and then when you do make the adjustment, we'll go forward. First off, what we do in the financial analysis, we'll show you exactly what you can do. Basically, that means you know exactly what you should do, and then we can take care of it for you, and then that's all good. You need a value, so that's 2,900 euros approximately. Then you have a valuation report for a rental property, because the bank will want to know what the value of the property is in rented state, which is usually a bit lower, as Ludo mentioned, and also we want to know the expected rental income. A valuation report for that is usually around 900 euros. So then we're at 3,800 euros right now. You have to go to the notary, about 900 euros. So that's 4,700 euros right now. A translator, let's say it's 5. And that's basically, those are basically the cost of the refinancing costs. That's one part. Now, the other thing we have to consider is the maximum mortgage that a bank, an investment mortgage bank, gives out is a maximum of 90%, depending on the bank, somewhere between 70 and 90% of the property value in rented state. Short explanation or example: if you have a home with a value, a regular value of 400,000 euros, right? Then the value in rented state is, let's say, 350 euros. Then from that 350,000 euros, obviously, 350,000 euros. From that, 90% is the maximum mortgage that they give out. So that is 315. So 315,000 euros is the maximum mortgage that you can get as an investment mortgage, basically based on the expected value of the property. We also have to know the rental income, of course. But for the sake of this explanation, let's say 315 is the maximum mortgage that you can take out. Then the additional cost that you might have is the difference between your current mortgage and the maximum mortgage that the investment mortgage bank gives out. If that's lower, if your current mortgage is lower than 315, you're all good, no additional cost. If your current mortgage is, let's say, 325, then you have to cover the difference between your current mortgage 325 and the maximum investment mortgage of 315 that you have to cover. So that's 10,000 euros additionally, but this really depends on your specific situation. So cost for the refinancing, about 5,000 euros, and the difference of your current mortgage and the investment mortgage that you can take out has to be determined still.
All right, thank you. Then we have a final question also for you, since it's about the interest rates. Is it in the Netherlands, the general fixed or variable rates?
It used to, well, no, it's fixed still. The Dutch banks, government, the majority of the people like to dig themselves in. Just keep everything exactly the same and then just be sure, and you don't have to worry about a thing. Makes a lot of sense, because your monthly payments will stay the same. You won't be surprised with any value changes. The only thing is, right now, the expectation is that the interest rate will drop a bit over the next coming 3-4 years if nothing too crazy happens, like something like COVID, for instance. Let's knock on wood for it not to happen. So if the world cools down, hopefully a bit, then we expect the interest rate to drop a bit more. Maybe, if we're lucky, to somewhere between 3.5% and 4%. Not a lot more, I expect. So that's basically what we expect now. Because of that expectation, people are more likely to, instead of the fixed 10 years, which was kind of the generic choice, people choose to fix their interest rate for shorter terms. So let's say 5 or 6 years. And some even go for variable rate. Why only some? Is because it's almost a lifestyle choice, because you know that the bank can change your interest rate every month. That means that you have to keep track of it every month as well. There's a lot of people that don't want to bother, even though the interest rate with variable rate, when you compare the 4.5% right now, there are banks that give out a variable rate of around 2.5%. It's a massive difference. But still, the preference of just know exactly what you can expect and don't have to bother with your mortgage is why a lot of people refrain from the variable rate. From my perspective, it makes a lot of sense, variable rate, but only if you feel comfortable there. So Dutch market usually fixed for somewhere between 6 and 10 years, not a lot longer this time. And if you're up for it, variable for sure.
All right, thank you. That's it from
I
my
think
side.
we have two questions left. I think those are the ones that you missed
okay.
out on once you dropped out.
Yeah.
We have one question from CL. How can the buyer enforce the seller on paying the penalty if the seller accepted multiple offers? And what percentage of the penalty is due to the buyer whose offer was accepted and then pulled out? I'll take this one. So actually, good to know is that before you, or up until the moment that you sign the purchase agreement, you are not obligated to move forward with the purchase. So let's say you make 3 offers and you only sign one purchase agreement for that one property, and you pull out from the other 2. Technically speaking, you don't have to pay any penalty towards the other 2. Now, of course, you have to ask yourself, is that the way you want to do business in general? Because the seller, they will tell other buyers that made an offer that they will not move forward with them. They are excited about your offer and want to transfer the property to you. And then you tell them, well, I also made another offer on another property. So it is a situation that we want to avoid, because the selling agent will also not only remember the buyer's name, but also remember the buying agent's name. So situations that we want to avoid. But from a technical perspective, from the moment up until the moment that you sign the purchase agreement, you can do whatever you like. From the moment that you have signed the purchase agreement and then want to cancel the purchase without using, for example, a financial condition or anything like that, then the penalty will be 10% of the purchase price. Okay, then I have a final question. I think this one is for you, Robin. Assuming I make an offer of 330K according to my annual income, then buy the property for 330K as well, can I then pay off some of it immediately afterwards and reduce the amount of years to mortgage?
Yes. I like these close questions. Those are very, very easy. No, so basically, what is important to know is, again, it depends per bank. We work with pretty much all banks, so there's a choice of around 35 to 40 banks. So that gives you some range. Any bank will always allow you to make an additional repayment of up to 10% of the original mortgage sum. So your example, 330, every year you can repay an additional amount of 33,000 euros. Some banks allow you to do more, 15 or 20%, and there's a select few that allow any repayment you like. So basically, from the moment that you own the property, you have the keys in your hand, mortgage starts, repay the whole thing, no worries. Kind of wondering why you would do that, because then you wouldn't need a mortgage in the first place, but basically that is an option. So there are definitely possibilities to do that, but you can also, in the specific situation that you showed, you can also already consider, well, maybe input savings from the start already, so your monthly payments are lower anyway. Why it makes more sense to do it later on, there's also another side to that. You can also say, okay, sure, let me first just take the entire mortgage, live in the property, see if I might want to change something. Maybe I don't like the kitchen as much, or I do want to make an adjustment. You can pay for that out of the savings that you later want to input. And then when you're just happy with the property, like how it's furnished, how everything works, and then you can say, okay, sure, now this is the remaining savings that I have left. And this is the amount that I want to input in your mortgage. And then you could indeed drop down the monthly payments, because basically what happens, your principal, so the mortgage debt, will be reduced, but the duration of your mortgage will stay the same. It will not shorten, it will just be the same. So that means that you pay lower monthly payments. And if that's your goal, definitely consider that. I would suggest check in with us first, because then we can also see, okay, sure, what amount of savings does actually make sense to input, because maybe your interest rate can even drop, or we can achieve your lower monthly payments with a certain amount of input of your savings. You might not necessarily have to input everything that you were planning to do, leaving you with more money that you can invest in another way, getting you a better result. Short answer, yes, you can make any repayment later on, depending on your bank, and we can consider that in the mortgage application already. We can make the right choice of a mortgage lender that allows you to do the repayment that you want to do.
Perfect. Well, thank you very much. I think that is it indeed. Thank you very much, Rick, for managing the Q&A also during the presentation. Always very nice to have you here. Thank you, Robin, for being here as well, being our loyal partner when it comes to everything finance. And thanks everyone for being here, for joining me today and joining us today here in the webinar. If you guys have any other questions that might be specific to your situation, well, you saw the previous slide, feel free to book an intake. See this slide to book an intake with Robin or his team. And then, yeah, I wish you a wonderful day. I hope the weather gets a little bit better. You can go for a walk. And then I hope to speak to you guys soon.
And Ludo, thank you for hosting again, as always. It's been a pleasure, and everybody enjoy your day, and speak soon, hopefully.
All right. Thanks, guys. Have a good one.
Thank you. Bye-bye.
Bye.